You can hear me now, though, right, guys? I'm waiting for somebody to tell me they can hear me. Just waiting. Anybody hear me? You can hear me. Awesome. All right. We're going to try this again. See, it's exciting times, right? So yeah, basically what you missed was me telling you how much I love you and how great y'all are. By the way, go ahead and hit the thumbs up and the like, follow me, subscribe to the channel, wherever you're at here. Do all those great things that help kind of get the stream up in front of people, with the algorithm and whatnot. I would appreciate that. You guys are a mess. You guys are a mess. I love y'all, man. Seriously. And it's good to have a little fun, right? So what was I saying? I said, oh man, so the markets absolutely love that Trump got elected, right? And unfortunately, some people are not so happy, but listen, folks, we're trading, right? And there could not be a stronger, I guess, kind of proof of support for Trump getting elected than what the markets did. If you guys were you guys watching the markets election night? Because if you were, you saw everything started going up, right? I mean, it was Bitcoin, it was other cryptos, it was stocks, the stock indexes were going up. Everything, the futures of the stock indexes were going up. Everything was going up other than gold. And gold was pulling back where I was already looking for it to pull back, so we were good with that. But man, oh man, it was kind of crazy, right? Everything kind of went up. And some people are going to be upset that Trump won. It is what it is. I guess the best way to explain it is, listen, guys, at the end of the day, he got all those electoral votes he got, and he got the popular vote. He got both. So, generally the people in the country want to see him in office versus Kamala. Okay. So it is what it is. We're at where we're at now. And so your job, now that you're in the markets, is to kind of, if you're upset about that happening, I can understand that. But if you're in the markets, your job now is to remove yourself from that, of what you feel personally about Trump being elected and all that kind of stuff, right? Because at the end of the day, whoever's in office, if you're in the market, your goal is to make money. And your goal is to make money, not just to have money. None of y'all are Scrooge McDuck. None of y'all want, a silo full of money that you can go swimming in, right? That would be nasty. But we want money for what money can do for us, right? It buys us freedom and time. It buys us freedom and travel, right? We're not so much constrained by the rules and regulations that everybody else is when you have enough money, right? So, again, if it wasn't your thing that Trump won and you're upset about that, I can understand that. But the fact that you're in the markets means you're in it to make that money, to make your life better. And there's nothing you can do about Trump being in office now. So, try your best to remove yourself from that feeling that you have about that. So that way you can focus on making money. You should be excited that the market itself is excited about it, because you're not going to make the market move on your own, right? And so if the market's all excited about this, then you just have to be in there with the market and go with it. Okay. So that's what we got going on there. Look, Fibo's begging for a link to join now. Oh my gosh. All right. I guess I'll send him a link. You guys want to see Fibo join us here as soon as he gets a chance? Give me just a minute here, guys. Let me send this link to him real quick. Excuse me. Fibo, check your messages here. There we go. All right. You've got it over there now. Maybe I'll let him talk here in a minute. But anyway, so listen, so here's the new thing. We've got a new all-time high for Bitcoin. It hasn't shot through the roof, right? It's kind of just getting up where it is here. So, you know, I kind of warned you guys that there was a good possibility that we get this pullback, even if we broke through the all-time high where we go up a few $1,000s and then pull back and then get the big breakthrough. And I think that might be what we're looking at going on here. So, you know, obviously we'll talk about that here with Fibo in just a minute. Before I bring them on here, guys, listen, I wanted to talk to you real quick here, guys. Look at this. Let me pull this up here real quick. Here's the thing. So, especially if you're in the Traders Club or if you're in our group coaching, by the way, there's no reason you shouldn't be. Traders Club is $50. You can get it at twctradersclub.com. But better yet, $97 a month, you can get the group coaching. All the group coaching that I've been charging $4,000 a year for, you've got it now for $97 a month. And that includes the $50 a month TWC Traders Club, and it includes Fibo's threshold theory. So you get all of that for $97 a month, guys. There's absolutely no better deal online. I'm telling you right now. But here's the thing. If you're in there, I've been talking about the idea that we had the all-time highs for the SPY and for the Dow, and how we would get an all-time high for the NASDAQ. Guess what? We got that just a couple of days ago. New all-time high for the NASDAQ. We got another new all-time high today here for the SPY. We got another new all-time high for the Dow. On top of that, Russell 2000, guys, it is within basically a few points of a new all-time high as well. These are the small caps. Those other indexes are made of large cap stocks. So what does that tell you? It tells you that not just the Mag 7's going, but you got large cap stocks in general going up. You've got small cap stocks about to hit a new all-time high. You've got the RSP, which is the equal weighted S&P, which includes not just large caps, but some small caps in there, hitting a new all-time high. Everybody is hitting a new all-time high. That is the healthiest the market has been in I don't know how long I can think back. So, you know, again, as it was kind of making up through the last few years, everybody's like, oh, it's the Mag 7. It's going to crash because it's only the Mag 7. Well, guess what, guys? We have breadth. We have huge breadth of stocks that makes new all-time highs. And on top of that, of course, we have Bitcoin here. And so, honestly, I'm looking for a reversal somewhere up here, right about where we're at. We're going to see if we can get rejected here. I think this is 1, 2, 3, 4, maybe 5 here for a leading diagonal, which means if we can get rejected just up here a little bit higher, we'll probably look at least at a pullback to around 67,550 or so. We haven't taken off here yet, so there's a good chance we might get rejected here and pull back and go. But we're always looking for the rejection, right? We're not just jumping in blindly, setting take profits, setting shorts or whatever, right? Because we're in this crazy area at this new all-time high. So you don't just set oh, I'm just going to take profit here and expect that you're going to be correcting to go down. I mean, you could take profit, that's fine. But you want to get, you know, some kind of confirmation on a smaller time frame that you're getting that reversal. So that's what I'm looking at there. Bernie says C3 members locked to the annual price, getting the raw end of the deal with the new price discount Traders Club. No, you're not. I posted a note to you guys, and I said, if you've got an annual, get a hold of me, DM me, and we'll get you set up on the other one. You guys got it. You got to pay attention, guys. I put these announcements in there all the time. Look at, I believe it's in the main chat room there. Oh my gosh, what's it called? I would never, hey, one thing I've never done is I've never burned anybody who's been with me. You can ask anybody who's been with us for years and years and years. You guys always get included in, and a lot of times it works out even better. In the gathering room, check in there. But just go ahead and send me a DM, okay? You better be sorry, man. I put that in there for y'all. Seriously. Yeah, because we're going to, because the C3, which was just the once a month educational stream, and then all the group coaching stuff we had, that was $97 a month. So yeah, my goal is to get all of y'all transferred in there so we can close down C3, because now for the same price, you're getting all this extra here. So yeah. Yeah. So don't ever, hey guys, if you're with us and you think we left you out on something, man, send me a DM because we don't do that. We don't do that. We get you there. Okay. Scott says, what'd you say there? Best group coaching in value. I agree. Peter says 10 out of 10. Chris says, what? Do it now. I'm telling you guys, these guys are in, they know. Okay. So jump on there. We'd love to have you in there. You can get in, by the way, the group coaching there, members.texaswestcapital.com. And look at that. I'm going to pull him up so he didn't even know ahead of time. He was looking
I'm here
over there doing something else.
Yeah, I'm just chilling.
What's going on, buddy? Hey, you look a little cold over there.
Not too bad. I mean, it's not freezing, but I'm comfortable. Put it that way.
Said to a guy who's lived over there in Kentucky, guys, in Kentucky. I always tell. I got to tell you guys real quick before we get into Fibo's charts here. My sister lived in Kentucky and then in the upper part of Tennessee for a while, for quite a few years here, before her husband passed away during COVID, and I kind of moved them all down here to Texas, taking care of everybody. But it's funny because when she gets talking and she's not paying attention, she slips in this really deep accent, and I keep telling her to say, "See, you're from the backwoods of Kentucky. You're from the backwoods of Kentucky. You hear it." Oh, she hates it when I say that, but it's so true. But anyway, just had to share that with y'all.
Yeah, I'm a transplant, so I'm not originally from here, so I don't talk like some of them around here. You know what I'm saying?
Yeah, we believe that.
Exactly. I just not. It was kind of interesting though, because when I was in the cattle industry for about 6 or 7 years, and my clients were all local farmers or just people that are just raising cattle and selling cattle. I started to talk like them, just kind of hanging around them for like 6 years, and then being in Kentucky and stuff. So I started to grab some of their lingo, that kind of thing. But now I'm in the energy space for the last 2 decades, so not as much farmers that I deal with on the energy side.
So now you sound like them stuck up old people, huh?
Yeah, grumpy old man.
Well, anyway, so here's what I'm looking at right here. And so I think we may get a bit of pull. I can't guarantee it, obviously, guys. Still trying to figure this out. I'm looking at this. This is 3 waves. This is 3 waves. This is 3 waves. So again, to me, it looks like ABC is 1, 2, WXY is 3, 4, and then A, B, and C will probably get here as maybe a 5 or something, and then we get that pullback overall. But anyway, yeah. So for me, I'm looking for a little bit further pull up and then a pullback down into this large fair value gap here. Maybe they're around 72, 225, maybe something like that. And then one push higher. And that, if this count is correct, and these are ABCs, or 3 waves, 1, 2, 3, 4, and then 5. And then we'll get the pullback again down here toward this daily pivot around 67.6 or something. And then we'll look for the big push up. And I can't guarantee it's going to happen, but right now that's the way I'm playing it. So, if you're in there with us at TWC, y'all know the plan. This is what we're looking at unless something else happens. And as I always say, guys, because of the way I trade, which isn't as systematic as what Fibo does, I look for a reason to sell or to short or to long. So I'm looking for price action to happen on a shorter time frame at my target areas to kind of suggest that, okay, yeah, it looks like this is probably where it's going to happen. If we don't see that, we don't sell, we don't buy, we don't do those things. So it's not just for me, it's not just blindly buying and selling. Fibo's proprietary system that he teaches that you get for $97 a month with all the other group coaching and everything else we do. You can do that, and that's a much more mechanical system that has definitive lists. I'm not going to watch and see if it's going to do this thing here. My level is here, my level is here, and we go and do that. And it works really good because markets tend to trend. And so, when you have mechanical systems like that, they work really well because markets tend to trend, right? They'll have a little bit of trouble like just every other system out there. You're going to have a little bit more trouble when it's going sideways. But if you ever come in and it's, we're going to be doing sideways, just expect that you're going to have some losses, some wins, But once that thing starts trending, I mean, man, it just gets really good. Isn't that right, Fibo?
Absolutely. And sometimes, I mean, it depends on the range that you're trading in. Sometimes you'll be able to get some hits in there, but the losses during the range should be minimal. Should be smaller than what you get on your trends. And if anybody's been following me over the last couple of months, we kind of came out of that. We kind of came out of that range, and now we're starting to trend a little bit. And my gains are up pretty good, and they should be because we're starting to trend a little bit. So,
yeah. Well, what you were telling me since we launched the trading club just around 2 months ago or so.
Yeah,
you're up about 104%, right?
Yeah, about 104%. Yeah.
I love that. I love it. And so you don't
and that's all spot. It's not leverage. It's literally 104% spot. So
yeah, you didn't have to oversize, didn't have to get stringy out there with the leverage, still making 100%.
I mean, it might be boring to some people, but I set it up to where I don't get stressed. I just kind of just let it go. And
so you can have a life outside of trading.
Yeah. Every once in a while. Yeah. I like
disc golf, right?
Yeah. I'm a disc golfer. Don't make fun.
I wasn't making fun. Not yet. Okay.
Not yet. No, it's but it is true. My system is a trend following swings trading type system. So if we do get into a range bound, which unfortunately we've been in the range we were in a range bound for like almost a freaking year, but I still did good. I still did well, just not as well as I would have liked, if it was trending, but
and on the smaller time frames, they're more, on the smaller time frames here, they do trend a bit, right? You see there is trending here.
Yeah.
On your
switch it to an hourly or if you go down to an hourly or something a little smaller, you can get some plays, that kind of thing.
But I bring this up because, a lot of times new people come in and they think, oh my God, it doesn't work. And because they're thinking of the single trade. And as you know, and as I know, and as anybody who has any length of time successfulness in trading knows, it's not about the single trade. It is about the system. It is about the results over time is what you have to be focused on. And in order to do that, you do proper risk management. And as long as you got that, and you've got a system that, nets you more wins than losses over time, or even you don't even have to get more wins than losses as long as your average win is greater than your average loss, and the greater your average win is over your average loss, the less you have to get correct over time, guys. So it's just a reality check here that, your goal when you're trading should be kind of moving into a system that you can use and you can apply over and over again throughout time, so that in using proper risk management with it, so that way you are successful, right? Because you will never be successful if all you do is focus on that single trade you're on. You're not going to be successful in trading with that way. If you're in business, it's all about your operations and your system that you have done. If you're focusing just on the dollar at the end of the day, what your revenue or whatever, without tweaking your system, you're just never going to get where you need to get. So
I've had 31 trades since October 1st. 21 have been wins, 10 have been losses. My losses I had 38% in losses out of 10. So if you did that, it's 3.8 average, at 3.8 average loss. But then on the other side, I have 21 trades with 135%, which is going to give you an average 6.5% gain. So I know it's not a lot when you think of it in like, oh, I won a 20%, 30%, 40% gain. But you got to look at it from the standpoint of over time, if that is continuing to do that. And the main thing is compounding, because that 6% is a shitload bigger than it was a year ago. Yeah. So you're compounding those percentages higher and higher each time. So, I mean, I tried to make it as simple as possible for me. And sometimes that might not resonate with people that want action like this. But, everybody's different.
Let's be honest, right? Most of the people that are trying to do that are losing money. They're not making money, right? I mean, let's be honest.
Yeah, unless they get really lucky, and they might hit a few trades right at the beginning, and then they think they're the best trader guys put on the
We've
service.
all been there.
Yeah, and then and then you just get run over by a truck.
Get humbled real quick. Yeah.
Yeah, it doesn't take long. So yeah, the percentages aren't like huge, but they can be. I mean, if this thing starts going parabolic, I'll get 20 and 30% gains with no problem.
Yeah, and you'll keep on, and you just keep adding the positions in, and just keep on going. Yeah, exactly. Scott's asking, do you guys ever use leverage, smaller amount? I don't. The leverage I get is usually in futures contracts. That's got its innate leverage in it. But as far as everything else, I usually just trade spot. There's no reason for most people to use leverage. Now, if I use leverage, it's going to be not so that I have a bigger position, but so I have less counterparty risk. Okay. And so what does that mean? That means if I want to put in $1,000 position, right, and I put the $1,000 in myself, it's all at risk, right? But if I do 10-to-1 leverage, I only have to put in $100 because I'm leveraged up 10 times. So especially when it comes to crypto exchanges, which are notorious for disappearing and going down, Cryptopia, there was that one up there in Canada where the guy died and nobody else had the codes to get into the wallets or anything. Quad, whatever that one was.
I know you're talking about.
Yeah. And so, when you use leverage that way, so that you're just minimizing how much you're actually putting in, it really does reduce that counterparty risk. And if something happens to the exchange run, guess what? You lose $100 instead of $1,000 or something, right? But the bigger thing about using it that way is that you're getting a greater return on what you're actually putting in, right? Because you're going to go up the same amount, but if you only put in 10% of it, it's going to be an exponentially greater return. So that's the way you should properly look at leverage. Don't look at leverage like most of us do, like I did when I first got in, which is this idea that, hey, if I can do five times leverage, my $100 becomes $500, just because you're going to end up getting stopped out a lot quicker on that. Okay, guys?
Yep.
So that's the way I feel about it. Fibo, you have any other thoughts on that?
No, I'm pretty much the same. All my leverage comes from the futures, the future stuff I do, because I do a lot of trading in futures with commodities, because that's what I've been doing for my entire life. Is commodities futures trading. So that's where my leverage comes from. Other than that, it's usually spot. Every once in a while, I'll do a leverage here and there, but if I do, it's based on a risk management reason, for a certain cash flow or something for a certain month or whatever. But it's not typical. I would say 90% of the time, I'm usually spot in the crypto market. I know it's boring, but it keeps me afloat, keeps me alive for the next day. So,
it's like businesses as well. Before we jump in your chart here, man, it's the boring businesses that really just make a lot of money. You think of storage units, you think of window cleaning. I mean, seriously, stuff like that. They make in, just a
they're not pretty. They're not pretty, but they're really.
But you make that money, right? So it's the same thing with trading. Let's not get hyped up on the dopamine, guys. Let's just get in with hey, I want to make money consistently over time so that I can have more freedom to do the things I want to do. So that's what we should be looking at. Anyway, go ahead and jump on there, Fibo.
Yeah, sure will. Chris asked me where I was from. I was originally born in Baltimore, Maryland, but I moved as a young kid because my dad got transferred, and I grew up outside of Chicago on the Indiana side. So Northwest Indiana is where I kind of grew up mostly, and then I moved down here to Kentucky. So that's where I've been. So I'm a transplant from Northwest Indiana up around Chicago, and then because that's where the Board of Trade was, and I did a lot of stuff there, and kind of worked my way down to cattle down here in Kentucky. but that's it. Let's go on to Bitcoin. I'm going to look at a few different time frames here, and kind of what I'm looking at, and kind of give you kind of the overall picture of what I'm looking at for Bitcoin. Unlike a lot of people I saw out on X, I didn't give two shits about the election because I am a technical analyst. And that first tenet of technical analysis is the market discounts everything. And that includes elections. It doesn't matter.
But
Now,
my narrative.
but I mean, I'm sure there's ways that people can trade all of that if they want to, but if I don't know, I stay clear of it because it just messes with my head, and I don't want to bring any bias that I already have in my head more to what I have, and I'm trying to keep it as little as possible. But given that, let's start out with the 4 hour. We started back here at this around this 59 or so on that dip, and started to work our way back up, hit a couple ranges, and we started to come back down again, and we didn't make a low here, and it went into the bear zone. This actually got filled right around, I think it was right around 67 and a half. And that's in my system when I'm buying into the extensions. I don't have the fibs on there that I had before, but when it dropped down into that area, there was a fib extension, which if you follow me, you know which ones I look at. The 127 to 140 range, or the 141, somewhere in that range is what I look for. Is that for that first line of defense of buying interest that could start to reverse the market, and we got bought in there at around 67.5, I believe. And then it started to work its way back up, and then then we got this big candle here, and went into a new bull zone. And then I also bought again at 70. It went into a red candle here. I wasn't right there at the open for the next candle. I got filled at 74,000, kind of even. It went down almost to like 73.2. I got filled about 74 once I finally went to the market. Because that's a lot of times what I'll do is if it goes into a bull zone, and it had the 3 settles above the, which it did right in here, and that's where I got the 74,000. So what happened was it continued up and actually hit a target that I had off of this trend-based extension, off of the way I look at a couple things here. But it started back here, and then I wanted to find somewhere inside the 141 to 127 range here. Which is off of this high to low. So as it made a new high right here, where was that first extension that I would want to take profit from the buy that I had back here? And I did, and it hit right at this point. And that was a nice, 12.5% gain off of that. And then it dipped back down. Didn't quite. So when you bring it down like this, it didn't quite get to the shallow fib. So I did not add more. But I do have the long at 74K at the moment. And the next one is going to be the 200% at 80.4. So that next target for me with the buy at 74 is where the next target is for that long. Now, if this actually dips back down into the shallow fib at around 74 again, I will add more to that position because now that we made a new high above this previous high right here, that opens up the shallow fib to add more. Now, if it would have rallied up and not make a new high, came back to the shallow fib, then I don't buy it because I'm not going to add to a position that doesn't show trend. So what I'm looking for now is either a dip back to 74, and this could actually dip all the way back down to the 61.8% level, which is around 72.2, which I think was pretty close to the level that you were looking at on a dip lower to get bought and then head higher. And that's fine because if I buy the shallow fib, and it bounces up, that's great. If I buy the shallow fib and it dips a little bit further into the 61.8% level at 72.2, that's fine also because the bull zone remains until 71.8. So if it gets down to 72.2, that should hold for buying interest and keep the trend going. Now, if it breaks into the bear zone, I'll take my loss off of the buys I have and go forward. But that's what I'm kind of looking at on the 4 hour here. Is a 80.4 target. And right now I feel like the momentum's still there. We're kind of beating up against this wall. I think it's a nice little another sell wall level that I think is just kind of getting eaten away here at each candle. And I think eventually once that gets eaten away, we're going to pop back up to that 80,000 and hopefully get that filled. And then if that happens, then this will move up, and then the shallow fib would become around 76.3. And then that would be a buy on a dip back down to the other side. Now the way I look at my the other way is if this actually starts to go up and we get 3 consecutive settles above the blue 141% level here, which is at 76.4. If we get 3 settles above that, that's also a signal. If you want to add longs to your position, that's also a signal to say buy it, because you're not getting the shallow fib dip at this time. It's ready to crank higher again. So I want to add to my position and press that position. Usually I do that if I'm flat and I don't have any other positions on. Then I'll add positions on the 141 after 3 settles above it. I typically don't buy more unless my risk management plan says I need some exposure. Then I'll buy. If not, then I just let it go and wait for a shallow fib dip. It really just comes down to how much you have, on with trades all over the place. Like, how much do you have on? Do I have room to put that exposure to add more risk, or am I putting too much on? So there's a lot that goes on a risk management side. But if you're just playing the guidelines is either wait for the shallow fib to get filled, or you buy 3 settles and just add to the position. That's kind of the general guideline on that. So everything looking good. We're in the bull zone. Momentum's good. I wouldn't be surprised to see a dip back down to 72, but unfortunately, I don't know what the market's going to do. So I got to buy at the shallow fib because it's what my plan says to do. So I'll be buying at 74. And if it dips to 72 too, then so be it. If it doesn't, then I get filled and then we rock it out to the upside. So it's more along the lines that I let the market come to me. I don't try to go to the market. And I think you kind of mentioned that earlier. I have a system. I kind of follow it. It's going to do what it's going to do. And that's why I don't really care about the elections or any other kind of news that's out there, because if the election would have went the other way, and we really don't know how the market would have reacted. Generally, we would have thought maybe it would have dropped on the news on the other side, but we really don't know. But if it did, then my indicators would have said, okay, it's time to get out, because we would have hit the stops or I just rely on the indicators and the price action to measure the psychology than the news people telling me what the psychology should be.
There you go.
That kind of thing. So it's a learning experience. Trust me, because I used to be all sucked into all that too, and it can get you. It's fun to talk about every once in a while, but I don't like to apply it to my trading. Put it that way.
Exactly. Yeah.
And then we go on to the daily. Daily looking pretty good. We got the bull zone here. We've been in it for a while. This one we had some really good trades, and a lot of this came from that where my 104% came from. A lot of it came from this one, because I had some buys down here in these low areas that finally got sold at some of these upper areas. So I got a lot of good percentages in there. I'm still long 20% after just taking profit at the last profit I had here was at 73.3, which was inside this extension zone that got hit 76.3, put it that way. It was this target hit right here, which it's kind of where the resistance is at the moment. We haven't really busted through there, but that was a take profit level off of somewhere down in the 50s. So wherever that percentage was, now I'm still 20% long. We made a new high from this high right here on this candle up to the upside. So this brings the shallow fib into play. So if we actually drop the market back down to 71.90 on the daily time frame, I will actually add to my longs. Or if you wanted to, you could do it if you get 3 settles above the 141, which is the 75.7. But I already have 20% long. So I'm exposed well enough for what I like. So if it gets above the 75.374 or 734, 3 consecutive settles, that is a signal to buy. I will not add because I got enough exposure on. Now, if you don't have exposure, that would be something to say, hey, you might want to put some longs on, because that next target above there is at 86.7, and I don't want to miss out on that market opportunity if I don't have anything on. But I will buy on a dip back to the shallow fib and add it to make 30%. And keep that stair stepping going, that I'd rather be buying lower than buying it on that break to the upside and just kind of get my average looking better. But I like what I'm seeing here. The next couple of targets I have after this target hit, this orange right here is just some trend-based extensions, because I was trying to find an area to where to hit this target that was inside a zone that I don't have on here anymore. Unfortunately, I kind of erased things that have already hit because it gets too kind of messy. So I kind of keep to the present of what's going on at the moment. So right now 20%. The next two targets is the 200% at 86.7, and I also like this trend line. This trend line break advantage. Once it finally broke here, came down and retested, and then started to take off. I feel like we're going to be on this move to the upside here, and then my next target above that is at 98.4. So for the daily right now, those are my two levels for my 20% that I'm long. Now, if I buy this shallow fib in here, I could find some other levels in that I could take profit before, or I could wait until it goes above 100,000. It just depends on, really it comes down to the risk management. If you want to take profits, you can set it at earlier targets, those kind of things. But right now, I'm just playing it right at the moment, 86.8 and then 98.4 as the next leg to the upside. Now, I don't think that's the ultimate high. I think we can get up to I think we can get up to at least minimum that 86, but it could go all the way up to the end of the 90s before it starts to correct back and get a nice correction back and then head higher later on. And I'll show you that in some of these other time frames. I know you've seen this weekly before, and there's a whole bunch on here, but the main thing is we're still in the bull zone. We came down here and tested a bunch of times and never really went into the bear zone. It came down here and tested this green level, this green area in here was my key level of support. And that was that 127 to 141 range after we made a new high. And when it broke up and came back down, it definitely wicked down below, but never got 3 weekly settlements underneath of it. So it never gave me a signal or a red flag that this could be going the other direction. It was staying in the bull zone. It was holding that key support from my fib levels that are created from the thresholds, because this red right here is from this bearish threshold here, and that's where those levels come in. And since that held, I'm looking for that upward trajectory on here, and each one of these is the low before we saw a rally on this cycle, and that matches up pretty nicely. And then the next low could be around June of 25. But then again, we also have times that we could see a high before we get to the June and then take off into the later part of 2025 and get even higher pricing when it comes to the October, November, December timeframe later on. And that's why I kind of put this little highlighted area. I call it the tornado path. You know, you see on like weather reports. I think this is the range that I think we're going to be headed, from now into the next year or into the end of next year. But the two levels that I'm looking at for the next leg up, not the ultimate high, but the next leg up, is either going to be right at this level where there's a whole bunch of fibs on here, but where they kind of overlap is what I'm looking at here. I have one right here at that 98 and change, the one I just showed on the daily, where one of my targets is at, matches a fib extension off of something else I was looking at a while back. And then the other one is an overlap of the 200%, and then also the 200% off another fib. These are all trend-based extensions off of waves and all that kind of stuff. But the main thing is it's either going to go to the 98 or it's going to go to the 147. I think it's more likely we're going to hit the 100K and probably a shit ton of selling, because that's an area that everybody's been waiting for. You got that almost that self-fulfilling prophecy of once it gets there, a lot of people are going to take profit, and that could kind of bring us down. So I would assume this first level. And the interesting thing is, if you look at like, this is like a wave and then a little bit of correction in here and then another wave and a little bit of a correction. This move for the first wave was at 102%. And if you took the 102% from this low, that's where it kind of overlaps that 98 or 99,000. So to me, that's where I think this leg could go to, at least for the leg that we're looking at the moment. And if we do get that, and then once we get to that, then maybe it falls back down into this low, because right now I have this one right here as the timing, and I'll show that on another chart in a second. But then the low here in June, so high and then maybe a low and then a higher high. I know there's a lot on there and it's a mess, but just I tried to clean it up. There was even more on there than I had before, but let's go over to the monthly. I'm kind of going into the higher time frames here, and then on the monthly, we're still in the bull zone. Didn't even get close to going into the bear zone, but my levels at the moment, shallow fib right here is at 57.6. But that's, this is a monthly. So it would take a major correction back to the downside to get
Yeah.
back long on the long term. But I would already be out of my 4-hour, my daily. Maybe the weekly doesn't even go bear or not if it goes that far. Let me see where that's at actually. Yeah, because right now we can go all the way down to 51.2, still maintain the bearish structure if we want a major correction to the downside. I don't think that's going to happen, but that's kind of the levels I'm looking at the moment. So we came up, came back down here to the shallow fib, worked, and has been working our way up. And that's where that 85-ish target comes into play as my next target to the upside. And that's where that comes on the dailies, around 85, 86. And the different time frames are putting us in here. And I took the low to the high here, and then we had the correction back for another leg to the upside. So because what I was doing was I had this extension between 83 and 91, and I was just kind of wondering what level should I put it at to take some profit inside that zone, because that's a pretty wide zone. I mean, that's, when you're talking 12 grand, that's a pretty big. So when I took this trend-based extension, it just gives me a guideline that this falls within that zone. So that's where my target is. To take some profit. And then if this breaks out above there, then the 122 would come into play. But then there's some other levels in here if you want to look at some other hits on the way up, that kind of thing. So monthly is looking good. Another thing I like to look at is on the monthly on these long term. I was looking at the red 5 EMA, and then I have a blue 8 EMA on the monthly. And as the red here kind of crossed to the downside and was underneath, and then it came and crossed to the upside here, kind of tested it in here, but then it stayed above it, and it's still above it. So we haven't had any crossover, even though we had this dip to the downside in here. This moving average never crossed. So if they want to kind of continue like it did here, and they just kind of run parallel together, and that's kind of what they're starting to build here, is this parallel together. So I think if that's the case, then that's why I like this move up to that 85. Maybe it dips back down to if it goes up to there, the shallow fib would be around 71 or so.
Kind of retest that previous all-time higher.
Yeah, and then work its way up to that, maybe the 107, dip back down and go up to the 122. Or if it gets really bullish, this 107 might not even matter. It could go all the way up to 122. It just depends on so don't quote me exactly on this pattern. I'm just kind of showing you that since we didn't have a crossover here and we're breaking out this month to a new high and getting into price discovery, we're starting to get into that, FOMO area. Maybe I know more people will probably FOMO once it gets to 85.
Yeah.
but right now that's what I'm kind of looking at. No crossover here. This support when the support held, and that had a lot to do with the weekly holding in there also. And we had those 3 months to the upside. So let's just keep cranking this thing that way. I always like to flip the monthly over just to show you how bearish it looks when you do the inverse. And right now I've been on this, movement to the downside. Everything's the same, just the numbers are upside down, but it just looks very bearish when you start to break this previous low here. And if you take a trend-based extension off that, just like I did before, that's where that 85 to 86 kind of comes into play. So no indicators, nothing. It's just more price action when you look at just the just the overall pattern of the market there. And then the last one I had was a 3-month or a quarterly. But this one was kind of interesting to me. Was I did a couple of measurements from the low to when it hit the high or the previous high, or at least traded through it. Because here you actually see, if I move this vertical line here, the wick actually goes above it on that point. So if you look at 8 bars out from the low is when the high hits. And then if you look at 9 bars out or another 3 months, that's when you actually break the 200%. Before heading even higher when it gets out to 11 bars, or this one's 11, this one's 12, and I'm just going to measure it at 12. But this 11 hit the high here with a couple more months after it. And then the same thing here. If you take the low to when it hit the high, it was 8 bars. And then it actually broke the 200% here at 9. At 12, it made the high. You can't see it, but the high is right there on that vertical line. So that's why I'm showing this high here. So you got a high to high to high cycle. And then you have another high cycle that brings us out to October of 25, which would be October, November, December on the quarterly. So sometime in that time frame is when we should be hitting that high of the cycle. So and that could be anywhere from 130 to 180. I've seen numbers all over the place, but I would assume higher than 122 because that's the 200% that we should be working in the next 3 months that we're actually in right now. So right now, if you look at where we're at, the low here, 8 bars, is when we hit the high and went above the high. We're breaking new highs right when we should during this quarter. And then if we go into the next quarter, right, this just means October, November, December on this one. And then January, February, March is that first quarter. So I think we can get up to 122K minimum by March or February or March of 2025, and then retrace back and then actually get further high up into who knows where, maybe 150, 160, somewhere around there, to where the October, November, December of 2025 high could come into play if it wants to keep this pattern going. Now, of course, this is a very small sample size because we only have 2 sets of times this has happened. But if it's going to happen again, and it's actually working pretty well because we're breaking into a new high during the quarter that it should, just like it did the last couple of times. So if that's the case, then we should see 122 by the end of March of 2025. So hopefully that happens. That's the way I'm playing it.
I wouldn't be complaining.
Yeah, I wouldn't be complaining at all. So just the way the patterns are and the bullish structure being the way it is, I'm pretty confident to keep my longs on and press my long positions as long as this thing wants to continue to trend to the upside. So that's all my craziness in different time frames for Bitcoin. So hopefully that was helpful, at least from what I'm looking at. I know that Chris and other people are going to look at it in different ways, but which is great because it's that's what I like about markets. People can look at the markets and analyze them in different ways to fit their risk tolerance, their personality, whatever. Because the way I do things might not measure to some people. They'd be like, I have no idea what the hell you're even talking about. But then there's other people who go, oh, I get it. That makes sense. And the light bulb goes off. And I'm sure you see that on your side too. Always, people are going to be like, I don't know what the hell you're talking about, Chris. But then there's people that go, oh man, I get that. And the light bulb goes off and they learn from it and they build from it. So hopefully by me going over these time frames and the way I kind of look at things, maybe it resonates with people. Maybe it doesn't. If not, ask me questions. I have no problem trying to answer when I can. And that's one thing that I tell everyone to do. If you're out on Twitter or X or whatever in the heck you want to call it, if someone's given a technical chart or advice of where they think the trend's going, ask them questions.
Yes.
Pressure them. Ask them, why are you doing this? Why are you doing that? Why do you think this? If they can't answer the question, don't listen to them. That's what it basically comes down to.
Yes. Stop your blind following, folks.
Yes, for sure. Because there's a lot of them out there, more than I would like to see. But that's just, it's social media. You're going to get that. But that's why it's better to ask questions, because I don't have any problem answering any question about anything that I do, because there's reasons behind everything that I do.
Exactly.
So instead of just putting up a chart and like when I was drawing on, like when I'm drawing on this chart right here, somebody would put that on Twitter and people would believe that's exactly what's going to happen. No. That's not how it works. So if someone asked me, I would say, no, that's just a general guideline of where I think things could go. But it's really the levels that you want to take profit, you want to buy, you want to take profit. And if that doesn't happen and it goes lower and you get stopped out, then that's the plan. You take a little bit of a loss.
Yep.
Go back to the drawing board. Where's the next entry? Where's the next exit? That kind of thing. So just ask questions. That's what I tell everybody is just pressure them. Just say, hey, what the hell's up with that? And if they don't answer, just walk away politely. Just say, see ya, take care.
Run away fast. Fast.
You can do that too, but but that's my BTC. Do you want me to go on, or do you want to show some BTC?
Yeah, no, go ahead, man. Go ahead. I know you're kind of limited time here, so jump at it, man.
Oh yeah. Oh my gosh, it's almost 1:00 already. All right. Ethereum. Again, we bought Ethereum back in some of these lows that I don't have the fibs on here while we're in the bear zone. Actually went up, hit 2 targets, and I'm actually all the targets are hit. I'm actually flat on Ethereum 4-hour now that we hit this one up here. I had a target hit here, and then this target hit within the fib extension zone. So we had a high here at 27.68 with a low of 23.55. Which gave the next profit area between 28.80 and 29.39. And of course, if you kind of see where this is all, let me kind of highlight this area over here so you can see where we're at. That's the zone that we're in. So just like on Bitcoin, I'm either going to buy on the dip back to the shallow fib, which right now is at 27.53, which stays bull, because you can go all the way down to 26.33 and stay in the bull zone. So if it gets down to that shallow fib on a dip, I'm going to buy and then look for the next target to the upside, which in this case would be 31.81 up there at the 200%. If we dip and get filled, that would be that nice long big gain that we would want if the trend is going to go, and that's where you're going to get a lot of gain. But we already got a lot of gain already, buying low once and then bought again into the bull zone. Hit the target. So, basically took some good profit off of these last couple of trades. But right now I'm flat. So if it gets 3 settles above 29.39 on the 4-hour basis, I'll go long again. And then my target will be 31.81. Or we dip back to 27.53. I buy there at the shallow fib and then have the same target at 31.81. I'd rather take the dip and then go up and then, but I don't want to be greedy. So if it gets 3 settles above it, I'll buy then and then take that profit, which would be, still be pretty good profit. If we just say 3 settles, I don't know where it would be, but even if it was right in there, that's a 6% gain. It's basically what my average has been this last couple of months on gains. So 21 of them, if you do 21 at 6%,
exactly.
So that's where all these trades come from. When I'm doing all this stuff.
Yeah.
The ins and outs of these stair steps, and that's what's kind of going on there. Ethereum on the daily. Now this was an interesting one because we were long in this bull zone, but it really kind of had a period of consolidation, and then it dipped back down into the bear zone, and it didn't last very long. And I went back historically to see if we needed to change the zones based on that little bit of a move. But if I move that, it takes out the best fit. So I'm just going to take that as is, and it's just a weird anomaly kind of thing, and I'm just going to go with it. Now, but the thing is even though that this went into the bear zone, and it had 3 settles underneath the previous shallow fib right here, typically you would get out. But since it was in this period of consolidation, I put a stop underneath this previous low because I've already taken the exposure. I've already taken the risk. So I might as well put the stop in instead of getting out of the market. So sometimes it's, there's guidelines, there's rules, and then there's guidelines.
Yeah.
And this is a risk management guideline. So if I have room to take a little bit more risk and take a little bit more loss if it doesn't work, then I'm willing to do that. And sometimes I'll play stops just below a previous low if it's pretty close. Or if it's not, then I just get out and take the loss and just move on. But in this case, it held, and then it went back into the bull zone, and now I'm 30% long at a really good average going forward, which is just great because my average on 20% is down here on these lows, and then I got the new bull zone right here, and then now I got 30%, and then these were the next 3 targets. So right now I have 10% at the 200%, which is at 30.86. Which matches up with this one back here also, just kind of overlapping right here. And that's just because we're in this period of consolidation. So there's that target. So what if that one hits, then people are going to ask me, well, where is the next one? So what I normally do on this is once this hits, I'm going to go back in history to find a good fit. And these lows right in here match kind of nicely with this level. So I'm just kind of taking this. And it all varies on where it's going to land. Sometimes it's high, sometimes it's lows. You just kind of fit it because the reason that you just kind of fit it is because the 127 to 141 is typically a range. I mean, it is a range, but it's that's why you can kind of fit it, because usually that range will be inside a significant high or something along those lines. So what I did was I started the fib back down here and go down to the low. So you get the new 127 to 141, which is between 33 and 3,400. And then this high right in here, or any of these wicks right in here, are a spot within that zone to take target. So my next target, so I have 10% sell here, I have a 10% sell here, and then once it breaks the 141, then it becomes the 200%, which is at 40.38, which would be my next target. So I have 30% long, and I already know where my next targets are. And then the same thing, now that we made a new high, I will buy more at the shallow fib at 27.52. And this one, and then it'll stay bull until 23.08, which is way down here, but that's because we had these large candles. But you can get into the shallow fib, add to your longs to get even a better average, and then find other targets after that. But right now I'm long 30%, and looking for much higher pricing at the moment, because we're in the bull zone on the daily as well as the bull zone on the 4 hour. So we're looking good there. Gold, real quick, went into the bear zone. I was looking for a spot to buy. I was looking at the 100% from my previous threshold at 26.53, where it came down and hit, and I bought, and I actually sold it at the shallow fib, just because it's in the bear zone. So I took that as a quick trade. Now this one is leverage. So this move right here from 26.53 to 26.95 doesn't look like much, but it is. It's a very good move. So I actually took profit there at the shallow fib. Actually went up a little higher. So again, if it comes back down to this point, I'll probably look to be buying it again, because that 26.53 is just underneath the 26.82. So what I would do is I would end up buying it, and then if it ended up settling out, I would just take that little bit of a loss and just kind of move on. Or I get bought, and then it wicks down and then gets me back up, and then I'm long again, and I'll probably do the same thing, just sell the shallow fib if it wants to continue to do that. Or if it doesn't come back down to the target, I'll just buy a new bull zone once it gets up into the threshold to get into the bullishness. But right now it's still a little bit on the bearish side here, so I wouldn't be surprised for this to kind of dribble back down toward this previous low. It might even go a little further if momentum starts to build back up, but we'll keep an eye on that. But right now, bought and sold. Now I'm kind of flat, just kind of waiting it out. And then the other metal is silver. Silver, we hit a bunch of targets on this one. I had a target hit here as a buy while in the bear zone, and then I actually held that one. And then the target hit at the 200% here, while we also added more long. So I sold, and had another long come in there. I actually hit a target here. I don't have it highlighted in here, but there's another target that hit right here, and then went up to this high. And then I bought, then buying again at the shallow fib. It did dip down to the 61.8% level at 31.22, but the bull zone has held. So right now this is holding pretty good. We'll have to see what happens, but right now you'd be long at the shallow fib here. And if it goes into the bear zone, you're going to end up taking a little bit of a loss there. But you got to remember, you had really good gain here. You had a really good gain here. So if you do take a little bit of a loss here, that's just the name of the game. You just kind of move on, and then reevaluate where you want your next buy during the bear zone. But hopefully the bull zone holds, get some support in here, works its way back to the upside, and we'll be golden. But we'll kind of see what happens there. Yeah. Real quick, dollar's in the bull zone. I haven't been trading this. I've been kind of sitting on the sidelines for the dollar. I've been busy with everything else. So I haven't really been trading this. But bull zone dipped back down, stayed in the bull zone. Next target is going to be up there at 105.76. The weird thing about this one is, even though it went into the bear zone here, it never had. Oh, it did have 3 settles underneath. Take that back. I haven't been trading it, so I haven't been really following it that much. So it did go into the bear zone, then back into the bull. So we're just waiting for that next target while in the bull zone there at 105.76. And then you see this on the daily. bull zone, hit the target, came back down. So if you hit the target right here, it actually came back down, and that's where the shallow fib was at 103. So if you actually traded this, you would have bought, you would have sold, you would have bought, and then you'd be looking to sell it again up inside this extension at 106.05. If I was trading it, but I'm not. But if someone is, and they're in my group and I do post this, they would be doing pretty well. But I haven't been trading this. Still bull zone, still moving to the upside. What I like about this is that the dollar's been in the bull zone, and everything else doesn't give a shit. Going up, stock market's going up, all that kind of stuff. So that's one of the things that people ask me a lot about is correlations. I don't deal with correlations. I don't really care about correlations. I look at everything separately because I think everything is its own bucket of psychology that people are buying and selling for all different reasons, depending on what the asset is. And I like to look at them separately. It's a little bit more work, a little bit more old school, but if you enjoy what you do, then it doesn't really matter, right? So when you go to SPY, SPY's been doing really good. Went back into the bull zone. The 38.2% level here at 57.8450. It went into the bull zone here, which was the third settle. So bought right here and then went up and hit this first target within this zone right here. And then if you brought this down, it did miss the shallow fib right here. But if you did what we normally do, and if you don't have any positions open, 59.47. Once it had three settles above it right here, then you bought because it broke that resistance according to the way I filter it. And then you would have bought there, and then you'd be working our way up to the target at this point. So bullish there. And then even on the daily, I'm not trading this one at the moment. I'm actually trading the daily, and we just went into the bull zone right here, and I just bought. And we're up a little bit on this one. The shallow fib is at, I got my numbers where I can't see the freaking things. And move them over here to the right so I can see them. Let me blow this up a little bit. The shallow fib right now is at 59.9575. And I think it kind of dipped down there. But once this went into the bull zone right here, and you make a little bit of a high and it comes back down, I typically don't buy when it's that close. Plus, I'm already, one contract of this is plenty enough for me. So I'm waiting for the target at the 200% or at the 300%. And the reason I'm using the 300% here is, for one, we're in price discovery, so I can't go back into history to see any levels. So I got to look at some extensions. You could also, and I haven't seen where this falls, but if you just kind of do like a trend-based extension off of this latest leg, like this, you could actually do a target there instead of the 300 and do it at 60.53. I might actually do that because that move right there would be plenty profit. And then if it dips back down to the shallow fib, then I'll use the 300% as the next target. And then if it wants to get really crazy, then I'll look up at the 62.57, and kind of keep working the stair stepping to the upside if it wants to go that route. But we are in the bull zone. I'm long. I'm looking for that first target at I think I might move it to 60.53 instead of 60.83. Yeah, what the hell? What's 30 points among friends? And then some of these other ones, we don't need to look at stacks. It's just something I follow. Solana working pretty good. Went into the bull zone, hit two targets. Went into the bull zone, hit this target, came back down, bought, and then hit another target. I'm flat, so I'm looking for shallow fib here at 190.39 or three settles above, which I don't think we're getting. Let me see where we're at here. Yeah, there was three settles above, so I didn't buy it. I sold it, and then I'm flat on Sol at the moment. So given that it dipped down a little bit, if you want to buy it, you can. I'm just going to wait for the shallow fib because I got plenty of other stuff on. I don't really need this one. So I'm going to go back down to 190.39 for a buy. If you are long at this point because of the three settles, The next target falls on this fib extension that overlaps the fib extensions from a previous threshold, which is 224 to 237, and it just touches the bottom there. So I'm at 224 and some change as the next level to take profit to the upside on Sol on the 4 hour. Daily is just hit the target, and profit was taken there at the 100%. So a shallow fib is at 182 on the daily, or if you get 3 settles above this, you can buy it and look for the next target. I typically don't do the 100% buys, but I wait for the extensions and buy it after 3 settles above the 141. So I'll be looking for the shallow fib dip there. So this one's also looking pretty good on the overall, breakout. I didn't see where this just eyeballing it here. I wonder where this so nice little break of this trend line, which could bring us into let's see here. Just taking the furthest point underneath. Looks like it's probably this one. If it's not, I'll move it, but that's pretty much where it's going to be. Then just take that same rate of change, and this is where it could be headed. So that's going to be another target to the upside here. There's other targets before this one, but of course I want to trade it as we go. But this is good. This will also be a level to watch, which is right around 316. So also something to watch here. So pretty bullish on Sol at the moment on the daily. Be nice to get down here, break the trend line, get a little bit of a throwback to the line, which is the shallow fib at the moment, would be beautiful, and bought, and then off to the races for another take profit target, which would be perfect because that's the way it should work, right? And then MSTR and Coin are the last two. This one's been beautiful. Broke into the bull zone, hit. There was a buy back in the bear zone that hit this first target, and then the second target was hit at the 200%. There's been a lot of trades on this one because if you look at it went down, shallow fib went up. There's a bunch of shallow fibs that hit. Like it hit that high and then hit a shallow fib. So it just depends on how many times you've bought and sold this one. It's going pretty good. I don't have any other positions on at the moment after these targets hit because I just missed it and wasn't paying attention. But the fib extension here is what I have highlighted, and it's in the zone now, but I really don't have a spot to sell at the moment. But it's anywhere between 275 and 295. But it's already been in there a couple of wicks here, so that could be it. And we get a little bit of a throwback, and then I'll buy it at 229.58 on the shallow fib. And if that's the case and it stays in the bull zone, which it should, with that shallow fib buy, then the next target above that's going to be the 200% at 375 and some change. So that's all also looking pretty good there. And then the last one, Coin, and I'm talking really fast because I'm just trying to cover some stuff. Into the bull zone here. It went into the bull zone, but they kind of dipped on us right away, but did not go back into the bear zone. Then took off and then came back down and did it again. But then again, it didn't go back into the bear zone. So if you're doing this one, this was some good trades in here too, because you would have been up to this point. You wouldn't have sold at your target yet, which was right here. But then it would have dipped back down. You would have bought it again, went up, made a new high right here. It's barely. You would have actually dipped back down and bought it again. Then you would have been shitting yourself because then it's dipping down into this point. But the support found right at my threshold, which is beautiful. So I'd love to see, because to me, what I'm trying to measure is those major psychology changes of where people are jumping over that threshold. So once they did that, and the psychology changed right there from this bearishness into bullishness, for it to dip back down here and hold that level right there is perfect for me. That's what I like to see. And that's telling me that my system's working, my levels are right, and those kind of things. So, and then of course it started to take off from there. And then one of the targets hit while in this zone. I took this high right here inside the 127 to 141. And then again, just like the rest of them, if it doesn't come back down and hit the shallow fib, which I can move this back to where it was. The shallow fib right now is at 237.59. If it doesn't come back down to that point, the 260 here, the 260.63, is the top of that fib extension zone. So 3 daily settlements above that, which the first one would be today if it happens. And then if we get 2 more, then it says to go long again and not wait for the shallow fib dip. So we'll have to kind of see what happens there. But I'd like to see a dip and then go heading back up higher to the 200%, which is at 308. So everything's kind of bullish there. So, whoo! I talked for a long time, but I got right at 115.
You got it there. You got it done. Hey, real quick before you go, I had myself muted there. On Sol, what was that target? 3 what?
Sol on the daily?
Yeah, I believe it's the daily. It's 300 and something.
On the trend line break or just the next one?
The 3, it was 300 something.
It was 316.40.
316.30 or 40, you said. Yeah, I've got a 315 target, so
there you go.
I like it. I like when it aligns like that.
The thing is, I just roughed that in, so it could be pretty close to the 315. I just did it real quick, so it could be
yeah,
right
but
around
$1. I mean, come on, man.
Yeah, it's good. Right around that range. Yeah. So
yeah, for sure.
That's where we're at on that. So hopefully that was helpful. I hate to cut it short, but I do got to run. But
well, before you go, one last question. So does that mean we're risk on?
What do you think?
Hey, I'm just making you say it, man.
Risk on.
Risk on. That's what I love it. All right, man.
All right.
Well, I know you got to get out of here. I really appreciate you stopping in. I'm sure everybody else does.
Yep.
And hey, guys, join us, man. Members.texaswestcapital.com. Get in there. Jump in the group coaching. You get everything I teach. You get everything Fibo teaches. You get our TWC Traders Club, which is my trades, his trades, Andrew's trades, Vince's trades, as well as our market updates throughout the day, things that we're looking at, things we're seeing. You can't lose for $97 a month, guys. Honestly, it's absolutely insane.
No, I mean, and hopefully people are getting some trades in and they've gotten the service paid for a year or two.
Yeah, exactly. Lord knows there's been more than a few trades in there with y'all that
exactly.
would easily pay it for a year easily. So
yep. So all right, man. Have a good rest of your stream, and I'll catch you later.
All right. Thanks a lot, Fibo. Right. Take care, bud.
Yep.
All right. Well, get on here. I was talking about mine here. And I saw his request there for Lumen. I'll jump on that here in just a minute. Let me see here. Looks like mine's a little bit short here on the screen. Yeah, so this is again still my my big macro Sol chart here. But as you can see here, we've got a local target here around 220, and then we do have that 315 target right here, and another 410 target up there. As we're looking for it to continue higher. So looking pretty good there. Definitely. I mean, again, if you got in anywhere around this 9 you've been holding, I mean, you've got to be loving life at this point. I mean, you're up 21, 22 times right now, 22x from December of 22, end of December 22. So not even quite 2 years here. I mean, and that's what it's all about, guys. It's not about getting 100x or 100% in a day as a trader. Again, I know it seems like that because you got maybe this person here or that person there that talk about it, month after month, or a different person and a different person, right? Maybe in crypto. But the fact is, none of those guys are getting consistent, 200% in a day returns, right? They get them every once in a while. And that's what trading is about. Most of trading is base hits, guys. Base hits, lock in profits, let time and compounding do the rest of the work for you. If you can get that in your head, and I'm going to be honest with you, it was tough for me when I first started. I was just like all of y'all when I first started, and I was looking to make all my money overnight. I was already spending it in my head before I ever made it, and that's why I didn't ever get anywhere at first. Once you get into the understanding that trading is not something you do from time to time. It's not something you do where you're going to get rich overnight, but it's something that you do like a job, right? It's consistent. You're in the market intelligently. And what that means is, as long as you're focusing on those shorter term targets and profits and getting them in, locking them in, along the way, you're going to get into some great trades. You're going to miss most of the great trades, guys. I'm telling you, 30 years doing this, I'm telling you right now, you're going to miss most of the great trades. But you're going to get some of them. And it only takes some of them. It only takes a few of them to really send your account skyrocketing. Okay? So Peter saying what? Got Sol at $10 and more at $30 before the big run up. Man, I love to hear that. I love to hear that. Real quick here, Lumen. I've got the weekly here on Lumen. I mean, pretty clearly this is a third wave, large candle spreads, large volume. I'm not even sure what we're at there in terms of how overextended that is. It's just a bit right there between the 200 and the 2618. So, whoops, get that out of there, hit the wrong button. Yeah, so I mean, if I'm looking at this weekly, I'm saying 1, 2, 3. I did 4 there, 5. 4 probably down here. Let me see what we got here. We got a pullback, 448. We got a pullback here, 452. So probably this pullback then. Let's make these a little bit easier to see. And so then here looks like 1, 2, 3, 4, 5. So it looks like 1, 2, and then we're getting a large candle spread, large spike of volume here. So again, this looks like a leading diagonal off here. So we're in wave 5. My thoughts would be we're at least getting the R5 pivot. So 1, 2, 3, 4, 5. Let's take it down a couple there. And then that gives us then 1, 2. We'll do it like this. And so if this is going to give us a leading diagonal there and a pullback, wave 3 minimum expected target up here about $15. And then wave 4 minimum expected target, or wave 5 minimum expected target right here around 1870 or so. Where does that kind of get us? Yeah, I kind of like that. It's all right. Kind of get us right in this kind of previous support resistance area. We had resistance here, and a little bit higher up we had support, so it puts us right in the middle of that. So I like that. But yeah, if I'm looking at this right now, that's what I would be thinking. This is the weekly chart. We're just now curled up. It looks like it's wanting to try to break out, bullishly above the SMA there on stochastic RSI. RSI remains really well overbought, just now breaking above SMA again as well. It's a good looking week on there. And so here we are, they hit revenue, but significantly missed on earnings, still went up. So that's something I like to show you guys, because what does that tell you? Stop trading the damn news. The market knows, the market knows what it's doing, right? If you're trading the news events, you're going to get things like this wrong often. I've been pointing out a lot of them, especially this last earnings seasons here. But yeah, if you need some proof that, hey, like Fibo was saying, he doesn't even pay attention to the, the news and whatever when he's trading, and I'm the same way, because this is exactly why. If you're looking at the chart, you go, okay, well, there's a leading diagonal there. It's probably going to go up. But if, so you're already prepared there on your chart, right? But if you're just listening to, oh my God, this was such a bad miss, 45% miss. That's huge. It's huge. Damn thing went up anyway, right? And we had some ones that had double beats and they went down just about 2 weeks ago, I think. And so, again, learn what you can about charting, about technical analysis, because when you do that and you focus on that rather than what the news event is, you're much more likely to get it correct. It doesn't mean you can't get it wrong, and your emotions can't kind of push your idea of what you're trying to trade or what you're looking at, on technical analysis. But the longer you do technical analysis properly, there's a lot of people online that do technical analysis and they don't do it properly, or they don't do it properly consistently. The key is, like anything else, you have to do it properly. You have to do it consistently, right? So if you're doing Elliott wave, for instance, right? You'll hear a lot of times online, well, Elliott wave doesn't work. You can just make it say whatever you want it to. Well, sure, you can make it say what you want it to say, unless you're following the rules, right? unless you're following the rules and watching the guidelines, right? If you do that, that cuts back significantly on you doing whatever you want to do. That doesn't mean you'll still get it right. No, because sometimes we'll try and figure it out when it's in the middle of a process where it could do an A, a B, or an A, a B, and a C, right? And we'll pick one and we'll work with it. And then we'll find, okay, no, it wasn't that one. It was one of the other ones. But, you know, Elliott Wave is a great example of people that just don't understand. And they say nonsense like that. But once you get it down, it really does help quite significantly. Again, like anything else, you won't always be correct. But you're going to find out once you're doing it consistently, if you're doing it correctly, consistently, you'll be amazed at how much it actually helps you out. Think of your Elliott Wave like a GPS in your car. All right, you're going to say, listen, I'm here. I want to go here. How do I get there, right? And then along the way, you know, when you're driving along the way, you're going to have road construction or there's an accident and it's going to take you on a detour, right? That's the great thing about Elliott Wave, because as you're going, it may change a little bit from what you thought your initial path was going to be, but you understand that, okay, corrections are 3 waves and they look like this, could be a triangle, whatever, do these things. And so you can kind of still understand it and understand where it's likely to go even when it deviates from what your original path was, okay? Let me see here. Sarang, what's up, man? Thank you, sir. I appreciate it. Gave a tip here. It says, could you look at FTM and Avax also? Yeah, let me pull up Avax here real quick. I've actually got an Avax chart, one that I am looking at. Let me see if I can find it here in all my... Do you guys have like 5 billion tabs and multiple windows and stuff like that, like me, or am I the only one? Asking for a friend. Me, I'm that friend. Let me pull up the Avax one here real quick. I've got that. So here's what I'm looking at VIX. Nothing has changed here. Looking at this as potentially a leading diagonal. And so we've got this ABC, and then we have a WXY, and then an ABC up. And so the initial target is going to be just a bit higher, just kind of like the top end of this low volume node here, about $32.20 or so. And continuing through that could see us heading up here, maybe around $37.64 to get that wave one. This is the daily chart. You know, along the way you'll pull back, but again, you know, we should expect it to be in 3 waves, right? We had 3 waves here, we had 3 waves here. So we should, you know, get 3 waves up toward, you know, one target or the other one there. Either way, I expect the pullback on wave 2, regardless of which target we get to. I would look for it to pull back right here to the daily pivot at around 26.30 or so. And then I would be looking for a reason to go long there on a shorter time frame, give us some look at a reversal potentially happening to head up in wave 3. All right. So that's what Avax is looking at here. Let me see here. FTM was the other one. Let me make a copy here. Let's see what we got on FTM. I think FTM's USDT only. Let me see here. And it looks like I've got one more request here, Stonebridge Advisors, about CLS. So I'll pull that up here in a minute as well, and then I will have to get going, guys. But let me see here. FTM, USDT, right? Okay. Let's see. Okay, so my first thought here is we are 3 waves down. We broke out above that second wave, so it should ultimately head higher. So I would look at 1.024 is the 1618 there. Oh, I like that target. It gets us pretty close to the previous swing high. It's what we usually look for with our first 5 waves, is that they take us right up around either a little bit before, a little bit after that previous swing high there. And this looks like ABC. So it looks like we've got a WXY here. And so what does that mean? That means overall on that, breaking out above that wave X should indicate that we're heading up higher there. Again, you can just take a quick pattern-based target here. Gives you a target of about 323 on the breakout there, without even having to really kind of go deep in there. And look at that. Look at that. Oh, yeah, look at that. This looks like a leading diagonal. This looks like 1, 2, 3, 4. That would get us 5 up there. Again, like I just said here, first 5 waves up, get you right around the previous swing high. So I like that. I think generally that's what we should expect. It does look like it's doing this really large kind of leading diagonal. So 1, 2, 3, 4. I guess a 5 up there. It's out of the way now. Yeah, and so this would probably do like 5 waves. So it'll be an A and a B, and then it'll be a C up, kind of like we have the ABC here, ABC here. So generally, that's what I would expect, both locally and a little bit more longer term there on what appears to be a leading diagonal here. Let me see here. Yeah, I can group them together. Yeah. I just, when I put them all together here, I just kind of just leave them all out because it's easier for me. And for me, it's like if it's out of sight, it's out of mind. And so, yeah. But yeah. Let me see here. And what was the question? CLSK? CleanSpark? Let me see. Well, let's just do it this way, I guess. Copy here, CleanSpark. Miners, did you guys catch miners the last few days? Holy crap. They did well, didn't they? I mean, but you know, so did Coinbase and even MicroStrategy there did pretty well. If we look at them, how are they doing today? Let me see here real quick. Let's see here. CLSK is up today. Okay, so yeah, Coors is still up. Is it? Okay, but yeah, Wolf's done well the last two days. WGMI is the ETF for the miners, but you know you expect the pullback. We got some pullback here, right? Why do we have pullback? Because they did so damn well. They were up like 20 plus 30% 2 days ago, and then up again yesterday. A lot of them. So you're going to see a lot of pullback here. But I'm not going to jump into that at the moment here because I'm trying to do this chart. It was CleanSpark you asked for, right? Midterm, long-term targets. Let me see here. Let me zoom out to the weekly here. Get a little clean picture. I mean, this is a great pullback here. Let me see. It's the 2049, 2064. Okay, so I'm looking at that because this looks like one move down and then a triangle, then move down. And I think is what we have here on the weekly. This looks like a triangle here for wave B or whatever we've got. Try again. A, B, C, D, and E. And so 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Yeah, it looks like ABC down there. B, C. I love that it found support on the pivot there. How far back is this pullback? Almost 50%. So I would look here and I'd say we'd have an initial target Probably right here around 48.75. Let me see here. And that's going to get us right about where the previous swing high area is there. Let me see. Yeah, because this looks like a leading diagonal. It looks like 1, 2, 3, 4, 5. And then, yeah, looks like right here is your B wave there. So it looks like 1 and then 2. And we're up above this, so we should continue up higher. But yeah, I would look probably up there around a 48.75. So from right now, it's a pretty good move up from 13.5, right? I'm trying to see if this is a 3 and a 4 or a 1 and a 2. If this is 3, 4, then, again, initial fifth wave target right there on 48.75. Long term, this right here, 1 and 2. Unless we get a bit of a leading diagonal out of this. I'm not so sure we get that. Let me look at something else here. Oh, it's not gonna let me change it just a minute here. There we go. We'll change it there. And we'll change this here. Set it back up. $87.57. All right. So that's the way I would look at this at the moment. Target of 48.75 and then potentially a target at 87.57. But we could see it definitely change. Its trajectory and kind of hit toward what we were looking at on the logarithmic chart. But right now, I don't want to jump up that high on it. So for me, those are the targets I'd look for, medium and longer term at the moment would be the 48.75 and then 87.57 would be where I'd be looking at. But again, keeping in mind that we could really see it kind of take off from there. All right. So hopefully it helps you out there. I think this is almost really a no-brainer, 48.75. So from 13.57 right now, you're talking about a rally of, what is that, 258% basically. I don't think anybody's going to be complaining about that, right? Locally here, what are we looking at? Yeah, I think we're doing a, it looks like 1, 2, 3, 4, maybe working on a 5 here. So, I think we may get a bit more movement up into the triangle here before we get rejected. Yeah, I think we'll get a little bit more movement up here because we're right here stuck in the low volume node. So we'll see if we can pop on through that up there. And if we can, maybe make a run up toward, $18, $20. Maybe not quite 20, but getting around there before we actually get a pullback. And that pullback would likely then just come back right into this kind of where we're at, maybe this $13.50 area, right into the low volume node and get it. So you kind of get, the resistance, and boom through it, pull back, and then kind of break out. All right. I'm late here, guys. I'm about 10 minutes over, so I'm going to have to go. As always, remember, the only thing you control is how much you lose. So please keep working on that risk management. I appreciate you guys showing up. You can join us at members.texaswestcapital.com. Again, if you're a C3 student right now, I did put a message there in the gathering room chat room there, about getting changed over to the group coaching because it's the same price. You just get a crap ton more stuff now. It really is ridiculous how inexpensive we're putting that out there. But you get all our group coaching that we've been charging, for $4,000 a year. Well worth it. It's not that we're not good. It's well worth it. But as anybody that's been with us for, most of the time that I've had TWC in business the last 7 years, they'll tell you I've been working on getting things to this point we're at today, where we could get it down there where it's only $97 a month and you get everything. So you get all our group coaching, learn how and why markets move the way they do, learn proper risk management, learn how to actually approach the market depending on what the market's looking like and what your goals are. All this stuff nobody else teaches. Learn market and trader psychology. Right? I'm a big part of that, right? I've got a master's degree in psychology. I've been doing this for 30 years. I'm going to tell you, you're going to learn stuff that you don't hear anywhere else. Proper risk management, all this great stuff. And you're going to meet some really, really cool people. I'll be honest with you. We've got some really great people. And a lot of them have been with us for years and years and years. And they're at least as knowledgeable as I am, it seems like. And they'll be quick to help you out as well. So it's a great place to learn. It's a great place to meet some friends and, kind of trade together even. All right. So you can do that at members.texaswestcapital.com. Of course, it also includes the Traders Club and then Fibo's threshold theory. You can learn that as well. All right. There it is, guys. Listen, I hope y'all have an amazing weekend. Trade safe. Remember, the only thing you control is how much you lose. I'm going to keep saying that over and over again. Right. So keep on working on that risk management. And I will see all of y'all, I guess, what? Oh, be sure you show up next Wednesday. Beards and Bitcoin, we do it on Wednesdays, 11 a.m. Central, 12 p.m. Eastern, same channels here and everything. I do that with my friends Tillman and Andrew from Arch Public, and we do that every week. But we've got our first guest next week. We're actually going to have Gary Cardone on there, big Bitcoin bull. If you guys haven't been following him, dude sold a $2+ million home to put into Bitcoin, among other things. So if you want to talk about people actually putting their money where their mouth is, he's the guy. And if you guys like the way it works out with us, with the guest on there, we'll start doing more of them. We've got lots of connections. And if you guys want to see us talking with them about Bitcoin and whatnot, you let us know. All right. That's it. Trade safe. And hopefully I'll see you guys over at TWC, over in the Trading Academy. All right. Take care, everybody. Maybe.